Hey, what's going on, guys? It is May 6th here. I'm going to be doing a trade recap. I think a lot of people are starting to enjoy these and really understand the thinking and the reasoning behind these trades. So I wanted to do this for Friday, uh, May 5th. I keep wanting to say April. This was meta trade, right? And the meta trade was absurd. I didn't tell anybody, but I actually was going to do this as a 0 DTE trade and I actually took some side contracts, about 15 or so. And it would have been almost a 700% win. I ended up playing it safe and going with a 1 week expiration. Still in fantastic trade, about 60 to 70%, but I know a couple people ended up taking the 0 DT, that kind of trade with me on the side. So congratulations to them. I think they got the full 500, 700%. But I think it's about being able to identify, like, hey, this trade's risky. Maybe I can take a further expiration, buy myself time, and let this thing play out, and add a little bit more size rather than take extreme risk, right? Size in super heavy and have a huge loss, and really regret that I didn't buy time, right? So I think I made the right decision. But I want to jump into the trade itself. Before I do that, though, let's go into the Discord really quickly, show you guys exactly what I was looking at. Obviously, Apple had reported the day prior, so tech was on focus, right? I was really kind of looking at these main two captions that I had here, right? Apple breaks above, market rallies, Apple fails, market drops. What I was looking for was a breakout above this line here, right? This was the the earnings high, as well as a key weekly level. And if it broke below, I would say either the all-time high trend line, which is this white line, or this green. I can't see the price, 166.64, I think. I thought market would dump. But I was really looking at Meta for the falling wedge that it was in. And I pointed it out the night before. I was primarily looking at it for a long side focus. Obviously, the wedge was leading into a gap fill to the downside. So I was going to take it with light size, because you don't ever know, right? That thing is an abyss once it gets into the gap. But we should all know that gap fills are essentially, for the most times, are traps, right? If it's to the downside, buyers are looking to scoop it up, either at the start of the gap or sometimes a little bit deeper into the gap around the EMAs or the MAs I've seen over the years. And then, long side, people love to trade the breakouts into gaps. So shorts are sitting slightly above, or, they basically wait for exhaustion candles. So I was a little careful in this one. And then right off the open, right, we'll see. I'll show you guys what happened when we switch back to the charts here. It was a little iffy, right? Because what ended up happening was this huge sell-off candle. And it had to do with news. I think it was privacy concerns with Meta. And it sold off from my breakout, right? I was really looking for over 235 to take this trade on the hourly. You guys can clearly see a nice little hourly resistance here. Fortunately, it sold off under, and it actually ended up breaking this level here, 232.75. So I was a little concerned with that aspect, but what I noticed was the sell-off led to a perfect spot. Obviously, it slightly broke the wedge trend line, but if we go to the daily really quickly, what it ended up doing was holding the 20, or I think it was the 21 or the 9 on the daily initially. So it basically broke down, and remember, this is lagging. So as the day started to consolidate, price action was slightly moved, right? The 9 EMA starts to move up a little bit. So I think it initially broke slightly under it, and I think most longs took their eyes off of it, or probably went short into the gap, whatever the case may have been. But what ended up happening and sparked at least my interest was the 15 and the 5, right? What we ended up seeing was this tight consolidation with what I thought was an accumulation right around 230, right? You had decreasing volume the entire way down on the 15-minute chart, right, with lows, right? There's no new low being made with higher volume. So that's my first indication that, hey, someone's probably buying down here. Shorts had that high volume off the open, and they couldn't break below with the 9 EMA with emphasis, meaning failure to go lower, right? So what we started to see too, and I'll show you guys, I don't know if this is just on Webull. I don't know. Yeah, I can't see it anywhere else. I couldn't see it on Thinkorswim. I couldn't see it on TradingView. But what I saw was this right here. And I found out what these are. So these high volume prints, I thought they were just like glitches on Webull. I'm starting to find out because I've been tying it into Cheddarflow, TradyTix. I don't think Unusual Whale has it, but I haven't checked. But I found that these are dark pool prints. So some big buyer actually came in on the 1 minute right around 8:09. I think it's 11:09 for East Coasters if you guys want to back test this. But somebody came in and bought on this candle here with 692,000 shares, which is massive, right? And then you guys can see, if we go back to the 5, this might give it a clearer picture too, right? Big buy here, and then every time it starts to push up to the top, right, you have high volume, and then it decreases near the lows, right? And then for the push-ups, you get increasing volume. Sell-offs are always low volume, and then the push-outs are on high volume. So it means that sellers really don't have a lot of emphasis behind the sell-offs that they're doing, right? And then the volume to get it back up to this range is higher volume, right? And what starts it is high volume. So somebody big is constantly buying the lows, and the sellers aren't really looking to sell, right? They're just basically gathering shares here, selling a little bit down here or up here, right? And then grabbing more shares, selling a little bit. Or these guys are just stopping out and basically feeding these guys the additional shares that they need to mark this up, right? So I started to notice that. And then as the market started to, consolidate for quite some time, I have my hourly up as well. So I trade on the 5, 15, 1 hour, and daily. I do like the 4 panel right here. You guys can see. So I have all 4 charts up at the same time. And I saw the 1 hour starting to look like this, right? Pre-market sell-off, right? Instantly dead volume here, within the first 2 candles. And this started to look like a hammer, right? And the spread is tiny, guys. Like if we just go take a look at the spread, right? We'll do another one here real quick. I guess it's 230, so I don't need to make another one. Just delete that. But the range was 230 to 231.39 with low volume. This looked like a hammer initially. It was pretty close to one. You can even say like a morning star. It's somewhere in that realm, right? Either way, you're not getting a big candle that breaks the lows with high volume. And then this is what really triggered me to take the trade, right, and kind of size into it, is we have this very, very, very low volume, very tight spread doji candle here right at the bottom, right? Spread is essentially dead, meaning bears cannot push this any lower. There's no selling pressure. What ends up happening there is a move and an expansion of price, and this made it very easy to figure out where they were going to expand that price to. What do you guys think? Right, it was this 232.75, and if you guys have been watching my imbalance candles, I think it was 2 videos ago or so, this was one massive imbalance candle, right, that just swept through all of these potential buyers, just pretty much anybody, right, down to the bottom of the wedge in that daily 9, and then this consolidation right here was right on the daily 9 EMA. So huge spot for really sellers to kind of choke at, in my opinion. I feel like they had a huge opportunity here, unless the goal itself was just to accumulate shares at a lower price, and the whole goal really wasn't to sell lower. It was just a very easy trade to spot, right? And if we go back to the Discord now, the actual alert itself, if you guys wanted to back test this and check, I took it at 512 was the expiration. I took it at 232 per contract. Like I said, I wanted to buy some time because that consolidation was so long. Had I taken it when I took it, I think I would have been sitting in it for an hour. And with, theta playing a role, there could have been potential sell-offs, so you never know about that. That could have damaged the contracts extremely. I posted on Twitter. I took just 15 contracts on the side by myself at 10 cents. Risk was 8, and I was looking for a contract top at like 4.9, so like a 19R, and I just didn't feel comfortable in it. So ended up taking this, right? In case people wanted to tag with me, it was a little bit safer of an option to give it a week, and I was really looking for an hourly close below 230, right, or maybe even a 15, but 230 was that spot. Like I said, 824, we go back to the chart. Where was that? I think I took it like right around here, and then it broke down. I think I went red on the position for a little bit. I held 230, just sized in here, popped back up. And you guys can clearly see, right, we kind of have a defined top right around here, and then we had the opening price right here. So we had 2 major spots that we needed to get through. So I wanted to see, once I took this position, obviously 230 be held. And what was lovely is was looking for a higher low, which we ended up getting right here. So this is buyers finally being aggressive, or a little bit more aggressive, because it wasn't that much more, right? I mean, I think the low prior to me getting in, I don't know, like 229.86, so 14 cents. And the reason I didn't stop here, guys, candle closes are very important. Don't freak out if it breaks under your level. Just be patient. Give it a 5-minute candle close. That's the importance too of not going super heavy. And don't be emotionally attached to the dollar amount. Just trade your plan. So it did break under my level just slightly. I did not stop out. Like I said, I just took a little bit of ads down here, something I was comfortable with. And if it did get that 5-minute candle close, I for sure would have stopped. But this pushed up. We finally got our higher low about. Actually, I'll just draw the line so you guys can see. By 33 cents. So it wasn't crazy, but buyers were being a little bit more aggressive in bidding up, which you always want to see the bid step up, right? And then ultimately, price started to gather a little bit more momentum in terms of volume. Was nothing crazy, like I said. And this is why this trade was so annoying, because when I got in, go look at the rest of the market. Tesla was rallying, Apple rallying. Go look at Amazon. It was rallying, right? I mean, it sold off in the open, pretty similar to Meta, but just a major rally off this 104 level. So it was kind of frustrating in that sense. But my thing is, trade your plan. Don't jump in, to whatever glitters is gold. You have to stick with what is your plan, and really lock in on it. And if you're wrong, you're wrong. I didn't jump on any other trade because I felt comfortable at this point with the tape. These guys were not losing 230. Bidders were now stepping up. And I felt comfortable with the position, right, in the daily potential with that 4-hour/daily falling wedge. I knew buyers were here. So then it pushed out, right, and we had some pretty decent volume actually breaking through this initial level here. We'll just do it in blue, which was the top of this, I would say, this accumulation range. It broke out, it pulled down, and this is what I didn't like, is that it pulled down a little bit lower than I would have liked. However, it started to hold the EMAs. And if you guys know, right, when EMAs start to get tight like this and they finally start to curl, you don't really want to take the trade off of a curl, right? All it shows when it's curling is that you're beginning to get a trend. And when I saw how tight this was, followed by the candles, and then we started to get a little bit of I would say spread between the 9, which is this blue, and the 21 here, we're now going to get an expansion of price. And whenever you get that expansion of the EMAs, right, you're going to get an expansion or an increase of your options contract. So really liked how this started to look and how it was holding the 21. And then obviously we had the cross as well, meaning that we are beginning to trend this way on top of the, this higher low. So everything was lining up. I was like, okay, this is going to be a good trade here. Now, if I'm wrong, I could probably just cut here at the higher low, or I could still hold and risk the, the 230 level on the daily. But sure enough, right, we ended up getting another. It's not high volume, guys. This is why this trade was a little bit weird. Typically for these big breaks, you want to see like a candle like that with volume supporting it, but you broke through the opening trading range, right here, and then no high volume, but it pulled back a tiny bit onto this level and just slowly, literally slowly melted up all day. 15-minute, I think it actually, yeah, I mean, look at, oh wait. 15-minute wasn't even that crazy with the volume either, but this is really, you guys take a look, this is a complete divergence between volume, right? This, like, you see how it's a slope near the lows? This is a picture perfect sign of just sellers just either not being interested or exhausting themselves, and I think they exhausted themselves here. And then you can see the flip of the script, right? We have this coming down like that, and then volume, it wasn't matching like this, right? It didn't go straight up, but you had an increase in volume as well. So it was increasing, not how we'd like to see it typically for a breakout, but it literally, I think it was just a balance fill of this candle here. And then once we got the breakout here, you see how it pushed up to kind of near our target in the top of this range. This is where I was looking for the imbalance to fill, right around this range where the sell-off occurred. And then there actually was another entry that presented itself. I didn't take it, of course, just because I was pretty much done with the day. But this big sell-off here pushed all the way down, and we almost had like a sell climax hammer that came off of this daily level. Right, if we zoom out just a tad, you guys see this? This was our first breakout target that we were looking for. So this was actually our first true retest of this level. Buyers held, right, which is good, because if you guys think about it, higher low, I would say like higher low here. You could consider this one just before the breakout, but this was one of the first major retests of this key level breakout, and it pushed down. You had a hammer. You could have just risked potentially the low of this candle here if you wanted to get a re-entry, but a very nice sell climax, and buyers were clearly trying to hold this 232.75 level, right? And then it pushed back up. This would have been a really nice 0 DTE trade, and of course marked up from what, 232.50 all the way up to 234.29. So I don't know the percentage gain on that, but for a 0 DTE trade, I wish I can go back because I definitely would have taken this looking back on it, especially just seeing finally the volume kind of being high in this range. Of course, it's a high volume sell-off, but it was pretty much matched for the breakdown retest here with a hammer. So that was Meta. Back to the Discord. I mean, we had some insane gains. I think I went 60 or 70% on the trade itself for a 1 DTE. Made about like 150 per con, but some people, man, went absolutely off. We had daily gains. We had someone get 548%. Somebody, Jay Craig didn't make a ton. He didn't take Meta, but there's a lot of people that took this trade. Barry ended up taking Nvidia, which is great for him. A huge win on Nvidia. Voss made 9% of his account. Just a ton of people. I don't think they all posted in daily gains, but some of the bigger ones right there. But yeah, just a nice trade. Hope everybody learned something from this, especially from the fact that even though it did break, essentially the pre-market plan that I had, right, especially with a sell-off like this, I didn't stray away from the plan. I just stayed patient. I noticed the accumulation here on the hourly above the falling wedge trend line, or the lower low trend line, off of a key daily 90 MA. I just kind of kept it on watch rather than just moving on from it. And then I really saw the variables start to align with the very low volume here and the low spread on the hourly, right? Tied it into this complete, divergence and exhaustion from sellers. Took my risk, was okay with my risk being 230, and then really reaped the rewards of this entire trade. I didn't really cut anything either. I really took this from, wherever I ended up taking it. First target was 232.75, held all the way to that level. I didn't start to trim till it got above this. And then, of course, majority of position was out right where I said, right? It was the imbalance from this the sell-off here in pre-market. So hope you guys enjoyed. That was pretty much the only trade I took. I think that might have been it. I think I might have taken one on Coin. Oh yeah, there was one on Coin. So let's go ahead and review Coin really quickly. This was a riskier trade, I would say, because this was a 0. But I want to bring up really quickly why I took this trade, the percentage gain I got on this one as well, and then kind of move on from here. Last one here was actually going to be Coin. This one was a little bit different in the sense that I actually directly traded a earnings play. So Coin had earnings day prior. I believe they beat. Doesn't really matter to me, to be honest. All I look for is levels, and I love the IV crush play. So all the cons got IV crushed. I think it was under the implied move, but really what I was looking for, and you guys can see it as well, there was this chart's a little bit choppy, I won't lie, but I like to look for major swing low and swing high pivots, and we had a one right here. So 80 or 53.66, clear support here. You have a support here, even though it did wick under, still pretty much held with the candle bodies and closes. And then in most recent times, right before this drop off, you had it holding on for dear life at the same 53.66. You technically could say 54, but really validated it though. In recent times was this retest here, right? This candle broke under, wick clearly retested it before it sold off lower, and then it sold off to this 47.92 level. But I didn't really care about that. I didn't want to trade the exact earnings, but obviously they beat and they gapped up, right? And what ended up happening right off the open was it broke out above this level and it simply pulled back for a retest, right? If we go to the 1 minute, I did not chase this, right? Absolutely did not chase this. I think that's kind of foolish. You just want to wait for a retest. And this ended up popping up pretty nicely, about $3 or so, and it pulled back. And this is literally right when I got an entry. So this happened at 7:39, something in this range, 7:39, 7:40. If we go to the Discord here really quickly, 60 call was taken at 6:39. So I literally took it, guys, literally on this candle, almost perfectly. Made everyone know too that, top of the list was Coin, Tesla, Meta. So I was looking at SoFi and Apple, but I ended up taking these contracts at 10 cents. Right here, a $60 call. Reason I had a $60 call, right, was because simply this level here. If we go to the daily, like I said, this chart's brutal at times. If it held here, 53.66, I thought it could move very easily through this sell-off candle and just retest, the high of this candle, some of the wicks from this lower one. If you don't trade coin very consistently, it loves, I would say, 54 to 60. Above 60, it trades very nicely to like 72. 72 has been this area where it really drops off lately. But I was looking for $60 on this trade, right? And then obviously took the 1 minute trade. Retest, because it sold off so dramatically off the rip, right? It sold off. You guys can see volume on the 1 minute started to fizzle out, meaning buyers, especially after an earnings gap up, these guys are probably taking profits and you're getting less buying pressure going to the top. And then it sold off pretty heavily on one and pushed down on, I would say, low volume, right? And then I just took the risk here on the one, just risking 53.66, probably a break under. That would have been, especially with how volatile it is right after an earnings play, I probably would have been like, if it breaks under on a 1, definitely would have cut. But I like the risk, right? It was a 10-cent contract trade, and really, right, this ended up popping pretty nicely and creating pretty consistent higher lows as well. This ended up pushing up at least before it broke under these initial ones. This was the break under, right? But for the most part, it had a consistent move from 53.66. Made new highs as well. I would say, yeah, 57.47, and then consistently moved up all day. But yeah, it was a clean trade off of the retest off that level, just not being greedy, not trying to chase it and feel like I missed the move. You guys can see, I'm sorry, I didn't realize I had it on the Discord screen, but here's the higher low trend line. Higher high, higher high, higher high. And I remember I was scaling somewhere in this range as we were making the higher highs. But jumping back to the Discord, right? I mean, 77%, 94. I think these topped out at about 120% or so. If I would have held them all day, I think they would have done a little bit better. Remember, for these IV crush plays, for me, it's about a quick in and out. So very simple trade on this one too. I told everybody, hey, like long side, right? If we go to the pre-watch list, what I was really looking for, long side focus, potential squeeze. I thought we can get a little bit more than 60 if that was the case, but yeah, I was looking for a retest of 53.66 and for this resistance to now hold as support, right? And if we go back to the chart, it doesn't get easier than this, guys, right? Just being patient, waiting for the retest of our level. Got pretty damn close. If we want to be as precise as possible, that's what, 53.75 to 53.66. That's not much of a risk at all. So just took the risk here as we got as close as we could to the level, took the trade, got a nice pop, pulled down, pop, pull down, and you guys can see this was a very scalable and very, very easy trade, honestly, for a quick 120%. I don't think I actually held to these highs up here. I think I scaled out here and then kind of for the new high here. But that was pretty much it, guys. I took 2 trades on Friday. I had a massive day. Like I said, I could have had a much bigger win on Meta if I just took the zeros, but played it a little bit safe and wanted to protect Coin's profits because Coin was actually the first trade of the day. Right, I ended up taking this at what time was it? 6:39. So this was actually the first trade of the day. So that kind of does it for today. I usually trade very light on Fridays. But hopefully this helped educate you guys a little bit. It just showed you a little bit into my thought process, why I take the trades I take, a little bit more about risk management as well, being patient. And remember, too, if you guys see stuff and you guys have a plan, stick with that. Don't try to jump from chart to chart because on that meta trade, very easy to do so, right? With Tesla running, all these other hot names seemingly running, it felt like my stock was a dead stock. But really, it was an accumulation going on. If you look at the 15 and the hourly, a lot of it was lining up to my trade plan, and I didn't deter from that. And I actually, gave me more confidence. I was able to size into it and have a very easy and comfortable win. So hope you guys enjoyed. Enjoy the rest of the weekend. Take care. Until next time.